young people don't have, $150,000 to $200,000. That's pretty hard to put together for anyone, let alone someone who's just starting out their career. No surprise then, like what's keeping the down payments kind of going in BC is just generational wealth transfer.
Welcome to The Flow, Real Estate and Money Show, a show focused on helping Canadians understand the different elements of real estate, mortgage, and finance. The goal of our show is to provide Canadians with the tools, information, and knowledge to have more success when it comes to their investing and real estate related decisions going forward. My name is Alex McFadyen, and I'm your host. I can't wait to get you into the flow. And we're back not too soon with my man, Mr. Brendon Ogmundson, because, well, by popular demand, he absolutely crushed the last interview and decided to put out a YouTube video of your own this time. And now I had to have you come back on and talk about why you were talking about what you were talking about in the YouTube video. But before I get into it, we're going to almost make this a tradition here today because I have to, after our first interview, Seahawks 1 game in, right? How are we looking?
The defense looked great, and for the 10th consecutive year, the offensive line looked terrible. So I don't know. I was pretty excited. I think Bo Nix looked pretty bad. No surprise, a rookie quarterback on the road. So we'll see how they do this week.
Let's go. Let's see. I know a lot of people were pretty nervous after that first half. It was a pretty rough start, and things picked up from there.
Giving up 2 safeties and a half.
I don't think I've ever seen that before, honestly, in a football game.
It just shouldn't happen. So they almost did a third. There was that screen they threw to Walker, and he bobbled it and almost got tackled in the air. So it was
wild.
Unbelievable.
Wild. There's somebody out there that's going to be listening to this podcast episode. And I hope you comment on the YouTube channel or on our podcast or send us a DM because we'd love to switch it up and talk a little bit of football in this. But let's get into the stuff. Mr. Brendon, you posted, and if you're anybody who's not watching this right now or who hasn't checked this out, BCREA has an email that you guys send out on a regular basis with awesome information. Thank you for that. But you also post YouTube videos once in a while. Once in a blue moon, you get on there, record your own YouTube videos, crushing it on there. Thank you. And one caught my eye where you talked a lot about, basically, from my impression, what the problems are with BC, British Columbia's real estate market, and what we need to do to address some of the issues that we're having unless we want to continue to have major issues with supply. Was that pretty much a sum up of the video, or how would you summarize the video?
I would summarize it as, and there's a whole report that goes along with it. This was kind of a first where we do a lot of these kind of really in-depth research reports with a lot of like quantitative modeling. It's the first time we've made a video to try and just really briefly explain it. So yeah, I think the video is a great companion piece to the rest of the report. Please go watch it, bump up our YouTube views, please. It's really in response to a report that the government of BC put out modeling what they think is going to happen due to the changes in zoning and with transit-oriented density and their small-scale multi-unit housing, what they think those changes are going to do for housing, for new home construction over the next decade. So they had some numbers, like they're going to complete somewhere between 200,000 and 300,000 more units over the next 10 years than they would have otherwise. So that's probably somewhere between 500 and 650,000 units total, kind of backloaded for the second part of that 10-year window. Naturally, we read it. It's really good. The people I know the people that wrote that report. They're super, super smart people. But what in our minds was like, well, these are great, but how do we actually get there from a like resources kind of point of view? Like, do we currently have the labor supply in the construction sector to do that? Do we have the sort of investment in capital to do that? Like, do we need to like really, like, if you're going to build a lot more apartment buildings, you need probably more cranes and stuff like that, right? Big capital equipment. And do we have like the productivity as well? So we looked at, there's some techniques we use in the paper to like figure out, well, like how much can we produce right now with the labor and capital and productivity we have? And how would those have to really scale up to hit the numbers the province wants to hit?
Yeah, and Brendon, thanks for explaining that. I mean, for anybody listening to the podcast here right now, I'd say first and foremost, this is impactful to you if you live in BC, you rent in BC, you have a home in BC, because this is literally going to ideally, depending on how things happen, shape the next 10 years of our real estate market to a high level or a high degree. Obviously, we have, I won't get into this part yet, but we have an election coming up this year as well. So I think that could obviously play a role. But let's start off with some of the key talking points here. I listed out the 6 key ones. We'll go dig into it and run through some questions. So first things, Brent, you highlighted the labor shortage, as noted here, that there's a massive requirement in the need of construction workers. You stated here, and the stats that you shared, or maybe that you found, were that BC needs to hire 130,000 new workers while replacing 55,000 people on the way out in the next decade in order to address affordability. And before I jump into the question here really quickly on that, there is something that a lot of people don't realize, that when you're replacing a retiree, you're not just replacing a human, you're replacing a lot of knowledge, like knowledge that someone who's coming in for their first 1 or 2 or 3 years probably doesn't have yet. So their level of efficiency is most likely nowhere near what that person is. So you're probably increasing that even more so at this point, or putting some time. So tell me a little bit more about, like, I guess, what some of the challenges that we're going to face there are, and what that could look like. How are we going to address that?
Yeah, so we had kind of a baseline of what the construction sector right now can produce, given the province puts together kind of an outlook for labor and what they expect over the next 10 years for the construction sector. They expect there's going to be 67,000 openings in the construction sector, but 55,000 of those are replacement, because about 20% of the construction workforce in BC is 55 or older. And that just generally means people are going to start retiring. And you made up a really good point. If you replace a 57-year-old skilled tradesperson with a 22-year-old skilled tradesperson, they're not as productive, right? And so you're losing productivity at a time when productivity in the construction sector is falling. And at best, the Bank of Canada put out some forecast for multi-factor productivity, which is sort of like how well you use all of your inputs together. And they expect construction in Canada to be flat in terms of productivity. So we're not gaining anywhere. So if you look at, like, we're producing right now around 45,000 units with just replacement level hiring in the construction sector and no changes in productivity. That's a kind of where we're at for capacity. So the natural sort of thing is, what if we just hired a lot more people? And what's kind of like a natural constraint on how much we can hire? Like, obviously you can't just hire 400,000 people into the construction industry, and it doesn't really work that way. So we looked at some other countries where they've had these sorts of zoning changes. The big one is New Zealand, where they had a major change in zoning in Auckland, New Zealand, that really spurred a lot of activity. And there, I believe they were able to take the share of employment working in construction from like 5% to about 8%. In BC, we have about 8% already working in construction. So we kind of gross that up similar to what we saw in New Zealand. So I think it ends up around 11, 12%. And that's about 130,000 workers. If that's all we do, and obviously there needs to be demand induced. Like, there needs to be a lot of like activity already, enough projects going that all these people are going to be fully utilized. So this kind of presumes that zoning really increases the demand for development across BC. So if that happens, and we can really start hiring a lot of new construction people in the construction workforce, it's about 130,000 workers, and doing so would enable us to, instead of building about 45,000 units per year, build like closer to like 60,000 units per year. And that starts to have a real impact. We have a whole model that we built that has a really nicely defined supply side. So starts become completions with a certain amount of time. Usually it's about 18 months. And then there's also this like filtering effect where new units hit the market. People in current existing homes can move into new units, and that frees up listings. So it actually generates listings as well, brings the whole market kind of into balance. That means prices can grow a lot slower than they would otherwise.
That's interesting. Just to go on a side note on that, where you talk about listings here, you published an email sometime in the last month. Again, we get so much awesome data there from you about, I believe, listings and supply relative to the marketplace. And we're quite high in listings right now, despite the feedback that your report shared, or maybe the report shared, and despite a lot of concerns people have. And I'm hearing it on a day-to-day basis, actually, from end users and clients that are saying, well, I don't think we really have this major supply issue that everybody's talking about. I see so many homes in the market, and they're sitting and they're overpriced and so forth. So, like, I mean, I guess my question to you is, if we're seeing such a significant amount of supply, and my question comes from the people that ask me every day, so much supply right now, why should we be so concerned about the next 3 to 5 years, especially based on the assumption that the most recent stats show that we are having a higher amount of housing starts again? Like, why are we so concerned about this?
Yeah, no, that's a really, really good question. So this is like a longer term model that we were using. So there's going to be short run fluctuations. We're kind of concerned about what's the level of listings over 10 years, and can we maintain, in the province, we need 45 to 50,000 listings all the time to keep markets more or less in balance if sales are normal. Right now, all across the province, I think you're in the Fraser Valley, sales are not normal. They're very weak. If sales were higher, we'd have a lot less inventory. A lot of what we're seeing right now in the Fraser Valley is not like new listings activity is really, really high, and that's caused the inventories to grow. Inventories are growing because there's not enough sales. There's just fewer sales happening. If sales start to pick up and just get back to normal, then inventory is going to start to come back down. And then we're back in the same issue we've had over the past decade, where market starts to heat up, active listings get down to a very low level, and prices really accelerate. Prices are sticky, so they accelerate and then they stop, and then they accelerate and they stop. And that's a real problem for affordability in the market. So what we're trying to say is, like, not like in the next year or two, do we have enough listings? It's if when the market gets back to normal with sales at average levels, can we have enough new supply such that it keeps the total inventory of a resale at a healthy level for, consistently, so we don't get these dips that cause price accelerations.
I mean, and we could get into a pretty long conversation, obviously, about what's holding the market back. I mean, I think it's obvious at this point right now that the market's recovering from a significant price and rate increase in the last couple of years. So,
Yep.
so let's continue forward with some of these other points that you talked about. So we've talked a little bit about the supply thing. The affordability conversation is an interesting one for me, and another one that's there's no easy answer to this one here. But even in a market that has a pretty good balance, affordability right now is still likely to continue to deteriorate based on where we're going and where we are right now. So based on what you've seen and what you're projecting, what they're projecting, like, do you see any real reason that affordability is going to improve with any of these changes, or are we just going to be destined to kind of see affordability get worse?
This is where the arithmetic is a little scary. So when we run these models and we have just sales at normal levels, so not like 2022, 2021 like type sales, just normal average levels of sales, and prices growing at about 4% a year. Historical growth in prices going back to about 2000 is about 6% a year. So with prices growing slower than they have at any time in the past 2 decades, so 4% growth, income's growing at about 3% because it's inflation plus about 1% productivity growth. So incomes that are growing at like 1% real, prices are growing at about 4%, and mortgage rates that come down to about 4.5%. So like those are like decent assumptions, maybe a bit conservative. And if that happens, we get a average price in the province that goes from about $1 million now to about $1.5 million by 2035. And the affordability in terms of like mortgage payments as a share of income goes to like 65%, or kind of, it's around 60ish now. It kind of comes down and then it goes back up. So affordability just deteriorates. And those are with like really conservative assumptions about price growth and income growth. And
did you say 2035 or 2045, Brendon?
2035.
2035. So 2035,
yeah,
we could see the average price point in British Columbia be not 1 million, but 1.5 million.
This is
now
there's the line about compound interest being the closest thing to magic in the universe. And in this case, it's working against us, right? Because if you're at $1 million and that's compounded at 4%, it grows really fast. At 6%, prices double every decade.
Okay. So like those numbers are crazy, but and that's right. The reason that obviously BC is suggesting that they've got a plan to fix this, right? And so if BC does reach their supposed 80,000 home targets by 2035, would that have a significant enough impact on those numbers that you just shared with me to have any meaningful difference, or is that based on 80,000? Just to be clear.
That's the status quo. That's if we just stay at current levels of construction capacity, 45,000 units a year.
Okay.
If we hire a lot more people and we get some real luck on our side in terms of like technology, like maybe AI is a game changer on like permitting, and it takes permitting down from 18 months to 2 months, right? Like, I don't know, something happens. We get all kinds of like new technology for building apartments that allows us to do things off site in a cheaper way and faster, whatever it is, right? We get lucky on technology. Then maybe we can at some point get to 80,000 units per year. That's, that's about double what we do now. So that's a significant improvement. If we could do all that, and that's a big lift, but that's what it would take, then we would start to see affordability really improve. Home prices, instead of growing at 4%, would be basically flat after inflation.
Crazy. Okay, so basically what I'm hearing from you is if we were able to magically achieve this 80,000 unit number, which seems far-fetched at this point, but is their goal, or I believe I understand it's the goal or the requirement or the need, if you will, then there's a good chance that we'll see not prices will go up, but they'll go up with, let's call it 2.5% or something of that nature instead of the 4% that you're referring to. Does that seem right? Am I hitting the nail there? Or?
So if we can build that much, and we have kind of a slower build towards that, so it's like by 2035 we're at that level. It doesn't kind of happen all at once.
Yeah.
Then we'd start to see prices would, instead of rising at 4%, would kind of rise and then flatten out, and by 2035 might even be growing at a negative rate, actually falling a little bit. Whether or not developers still want to build 80,000 units a year when prices are falling, we try and take account of that in the models. But it's an open question, right? Like, developers are not going to build into a market that's where prices are down.
What like, from your perspective, let's just say we find a way to get close to that number. We bring in the people. Like, what are some of the more broad economic impacts of making this happen? Like the intangibles, the things that we maybe aren't thinking about right now. If we were able to bring in the workers to do that, like what could we expect the other byproducts, both positive and negative, of being able to get close to achieving this goal? Any thoughts on that?
I think a lot of the just general unhappiness, not just in BC, but across Canada, is really just housing related. It's just really hard for people to find housing. I think I have a colleague that sort of had a housing theory of everything. Like most discontent is just about housing. If it's difficult just to find shelter at an affordable level in your life, it makes everything else harder.
Yeah.
So the goal here then is to try and figure out how we can do that, especially for the huge amount of people that are currently in their 30s that are looking for housing, or the Gen Z that are in their early 20s that are going to be looking for housing in the next 10 years. It'd be a real failure to them if we didn't do something to make it easier for them to stay in BC. Selfishly, I've got an 18-year-old and a 16-year-old. I would really like it if they could stay in BC and preferably stay in the Lower Mainland. And that's a really, really tough thing for a lot of young people to do. So if we want to be able to attract or keep people in BC, or attract people to BC to have an economy that's still thriving, then we need to fix the housing situation.
Well, and right now, to be transparent with you, one of the things that we talk about with our clients who have kids, youth, children, whatever it is, and even actually, funny enough, like I see this most frequently adopted by people who are just having little ones, is the idea of buying something now so that they can stay. Lose my focus here. Buying something now so that the kids can stay in the Lower Mainland and be with them. And we've seen a lot of uptake on that, interestingly enough. But yeah, I think the biggest impact of the quote unquote affordability crisis, no doubt, is the youth. And one of the biggest reasons for that is the amount of capital typically required to get there, notwithstanding things like the stress test and the higher interest rates and all that kind of stuff just makes it harder.
Yeah. I had a chart that I have in presentations that's showing like a 20% down payment on an average price in BC versus incomes over time. And in about 2005 is when the first time it took a full year of income to make a 20% down payment. And now, of course, we're well above that. Young people don't have $150,000 to $200,000 generally. That's pretty hard to put together for anyone, let alone someone who's just starting out their career. No surprise then, like, what's keeping the down payments kind of going in BC is just generational wealth transfer, which you probably see every single day in your business. But that's what it takes, and unfortunately that means you need to be sort of fortunate or privileged enough to have family with a lot of cash lying around and willing to gift it to you for a down payment. Not everyone is in that situation. And that just makes it even more difficult, more unequal. It makes for again, like a lot of discontent, because it makes the whole housing system kind of a lot bigger, a lot more of a struggle for a lot of
Yeah,
people.
I think, I mean, this is probably, I will do this in a separate meeting. I'll have a full conversation on the first time buyer thing. But, just anecdotally speaking, because I get a chance to work with people in different stages of their life on a regular basis, it never ceases to amaze me that, I don't know whether it be through CMHC or any of these other things, that they don't look at the fact that, and this is what I see, is that typically a lot of the, either whether they're in late 20s or early 30s, where they are first time buyers, especially in the Lower Mainland, Fraser Valley, or anywhere in a major city in British Columbia, they're already paying rent of like $2,500, $3,000, $3,500, something of that nature. And a lot of them even have enough for, say, 5% down. They just straight up can't qualify. Stress tests are too high, and their
Yeah,
monthly payments are very sustainable. Like, they could make those monthly payments. They're already doing it in rent right now. And they're sitting there like, man, I could buy this condo and pay $3,500 a month. I'm already doing it in rent right now, but you just won't let me because on
can't
paper it
qualify.
says, yeah. And so, yeah, we're adding a 30-year amortization for new development properties, which there aren't any around, or at least not as many as we'd like, and they're paying more for that anyways.
Yeah.
I know that's not a BC thing, but that's a whole other conversation that I think that I wish that any government would really take more seriously.
It's the toughest time I think there's ever been for if you're 30 years old. Really hard to get into the ownership market because of not just high prices, high down payments. Then you got to qualify at a really tough stress test rate. But then even if you want to rent, it's not like you're getting a deal. It's essentially as expensive in Vancouver, especially 2-bedroom, $3,500 a month.
That's just it. Yeah, that's just it. So back to your point, we talked about, so like, obviously chances of us hitting 80,000 builds is very unlikely. Maybe we beat our current marker of 45 that you're talking about right now. So we have to bring in all these new workers, or we have to convince a bunch of people to get into construction, which is a fantastic trade, a great career. And a lot of my clients do very well financially and are happy doing it. Very tough work. But the thing that I think I'm most curious about, and maybe this kind of goes off track a little bit, and transparently something that's affected me, is the way that our cities are being built and considered. And I don't know if this is a provincial thing or just a government thing or just the nature of bringing all these people. But full disclosure, I literally just moved my primary living. I'm going back and forth, but primary living out of the Lower Mainland. I was, in the matter of 5 years, it got way too congested, unenjoyable, lost its sense of culture or community, and just genuinely was super unhappy living in that level of, quote unquote rat race. And the amount of people that I'm moving, clients that I'm moving from Vancouver or the Fraser Valley, anywhere from Vancouver to Chilliwack out to Alberta or small cities in BC and all these different places, is crazy. I got to say, it's like 1 in 3 people is like, I'm out. I literally got a call like this right before our meeting here today. And most people are on their way out and looking for something different. How, like, I guess my question to you is probably very vague, but I'll try to make it more focused. If we were to kind of look in the future and think, like, how does the government tiptoe around the fact that all of our young people want to leave the freaking cities and get the heck out of here, but we need to build more in the cities? Like, is there a solution for that? Is this something that they even talk about? Are you aware that they're communicating about these things? Because it seems to be a serious issue that Vancouver and that city and the cities are losing all their young families.
It's difficult. So on the where do we find the workers side of things, we're not training enough young people now either. There's not enough spots in places like BCIT and other places to really get young people the skills in whatever trade they choose quickly and get them working quickly. We don't have enough of those spots, and I don't know if the government's thought this through enough. Hopefully our report helps them think about it a bit more, about just the resource requirements. So you can't accelerate building the way they want without a lot more people than they've currently kind of projected in their own labor forecasts. So how do you, in a fairly short period of time, like, can we train a bunch of people in their 20s to work in construction? Probably part of it, sure. We have some real incentives for young people to get into trades and grants or whatever, right? Some money thrown at young people so that they can go get an education in trades and not incur any debt in doing so. probably be a great idea. But we probably also need to target immigration towards construction. Like we had a huge amount of temporary foreign workers and non-permanent and permanent residents as well. But if you look at the careers that a lot of those new immigrants are going into, it's not construction. So that's not helping. So we need to, part of it's going to be training more young people, incentivizing young people to go into the trades. And part of it's going to have to be targeted immigration. The targeted immigration part, of course, has a housing demand impact. We didn't model that in this because I didn't want it to be the only thing that anyone talked about in the report, because that's something that can be taken out of context really easily. But it's going to have it's going to have a demand impact, and that's like, well, how much of the benefits of new supply are countered by the demand that you're bringing in to build that supply. So we didn't run those numbers. That's probably, it would be really interesting to do so, and maybe we will, but it's certainly an issue, right?
And until that time, we'll probably continue to see, well, as we talked about, less and less workers getting involved in the construction field unless there's a greater level of incentivization to do so, and any reason for them to get involved with the industry and stay in the city. And back to the second point that I made about that is, and maybe this is more of a tangent and less of a comment on your video per se, but I just genuinely would love to hear your feedback. Like, does it seem like our government is even aware of the fact that most residents, or not most, so many young families are exiting our cities? Does it seem like there's an awareness of that? Does it look like they're even trying to resolve that in any way, shape, or form? Because I hear about, we're gonna make lots multi-use, we're gonna build more condos, we're gonna do that, but that's not really answering the questions of all the families I'm talking to on a day-to-day basis, where they're like, we don't feel like it's a sense of community. We see is condos everywhere. There's no roads, there's no hospitals. We're out, man. We're out. We're moving on. Is that something that's even talked about?
I think the fact that we're, this kind of happens with BC and Alberta all the time. Like, it's either everyone's coming from Alberta into BC, or everyone's going from BC. It kind of changes every few years. Right now, we have a lot of out migration to Alberta. Before, we had tons of in migration from Alberta. That changes based on the fortunes of the relative economies. When BC is doing well and Alberta is not, we tend to attract a lot of people from Alberta. In this case, maybe it's a little bit stickier because it is a lot of young people that are going to Alberta for cheaper housing. Another slide in the presentation: an apartment in the Okanagan is more expensive than a single family home in Edmonton. So entry level housing is really expensive in BC, and that's the Okanagan. That should be a little bit more affordable. And so we're going to be because of our affordability situation. That's going to cause younger people to leave the province. That's not something that happened overnight, though. Like, we got to this situation with affordability because of a decade of really lousy housing policy. The way they're addressing that now is hopefully in all of their plans, the Homes for People plan, that a lot of these zoning and permitting change and else is a part of, is that let's not repeat that mistake over the next decade. So 10 years from now, we're not seeing the kids who are currently in their teens leaving BC for Alberta or wherever else because they can find something affordable in BC.
Okay, so if you were to kind of look at, with all these, and we didn't get too much into the specifics of like what their plans are. I know you kind of addressed what the challenges are more than anything else, which is awesome, and that's the purpose of your video and so forth. Looking forward, I guess it's 10 and a half years from that right now, so 2035. Based on your modeling and your best guesstimates, let's just stay based on where things are today, based on the trajectory right now, what is the most likely, I guess, outcome, at that point? Do we hit our target? Do we get close to our target? Do you have an idea of like, what's the most probable outcome given all these changes, or are you able to answer that question?
I think that our unfortunately, like, our status quo affordability forecast is probably the most probable, just because the barriers to increasing construction. I want to be more optimistic. Like, I'd love to say like, oh, of course we can massively increase capacity, and maybe we can. I don't think we can get to 80,000 starts in 10 years. I think that'd be really, really difficult. If we can stay in like the 50, 55 range, even, that would make a huge difference. But I mean, even our status quo is 4% price growth year after year. It doesn't take much on average to hit that in the BC housing market, right? All it takes is like 1 year of prices accelerate 20%, and they do that all the time. So I'd like to be really optimistic and say that, we can keep prices kind of flat over the next, I know people probably don't want to hear prices flat for 10 years, but like, it's probably what we need. We had 10 years of price growth in a year and a half during the pandemic. So like, it would be great for housing if prices just stayed kind of flat over the next decade. I don't think we can do that. We've never demonstrated any ability to do that, other than there was this magic time right after about 8 years following the financial crisis, maybe 7 years, where prices were just flat. Like in the Fraser Valley, I think the average apartment price was like $250,000 to $300,000 from like 2009 to 2015.
It's true. Yeah, actually, that's when I bought my first condo. I bought it in 2009, and I think 2010 it was, or 11, it was down a little bit, not much, and then it wasn't till 2014 that we saw. I mean, it was slowly going up, but nothing notable. Yeah. 2015.
And because we had a huge supply overhang. So the same thing happened in the Okanagan. Prices in the Okanagan were flat because they built so much in like investor kind of condos in Kelowna right as the financial crisis hit. And then they had so much inventory they had to get rid of that it just kind of depressed the whole market for a really long time. That's a bad way to go about it. I don't want a financial crisis that, causes a gigantic supply overhang, but we can just like satisfy the amount of demand such that prices aren't accelerating. That would be a huge, huge win.
I'd like that. That would be all right. Hey, that'd be all right. That'd be all right.
Yeah. I mean, I think, we've had a lot of price increases over the past decade. We can maybe have a nice calm 10-year window with inflation +1 or something.
Wishful thinking until another day. Well, I'm really grateful, Brendon. Thanks so much for coming on and breaking this down. I know that this is such a hot topic, and there's so many people out there that are asking a lot of the questions that you answered here today and just genuinely curious. And although I know you don't have the answers, you do a good job of articulating it and explaining it from a different perspective. So I appreciate you taking the time, and hopefully we can get you back on again in the future, because I've had, like I said, a great response. Yeah. So if you're listening to the podcast or you're watching this on YouTube, go check out Brendon's YouTube. I'll link it in there, so y'all can check it out and see what he has to say and tune into his updates and what he's doing there on a quarterly or weekly basis and all the fun data. So all y'all data nerds are going to love this stuff. So thank you, Brendon. Appreciate you, buddy. And let's hope for a winning week 2.
You bet. Tune out.
All right. Cheers, buddy. Thank you.
Thanks.
That was an unreal episode of The Flow. I hope you enjoyed it as much as I did on my side right here. If you haven't already done so, make sure to check out all of the incredible resources that we have available. You can find us on Instagram at Flow Mortgage Co. You can find us on our website, getflowmortgage.ca. And of course, don't forget our free first-time homebuyer masterclass that's currently available on our website for anyone who listens to the episodes. And if you loved what you listened here today, the only thing that we ask for is to share this with someone else that you think this could help. And hey, maybe leave us a great review online.